Welcome back to AI Capital Brief. Today, we're breaking down a phenomenon happening right now in the markets. Quietly, behind the scenes, options traders are making a fortune, and most retail investors have no idea how. And in the next 5 minutes, I'm going to show you the exact setups professionals have been using over the last 90 days to pull in 50%, 100%, even 300% returns, using option strategies that anyone can learn. Let's jump in. Over the last 90 days, the traders who made the most money weren't picking random stocks. They were doing one thing: positioning ahead of volatility. Here are real examples from recent market action. In the 2 weeks leading up to earnings, options traders noticed something unusual. Call volume tripled, IV surged above 67%, and whale-sized call blocks hit the tape around $650 and $700 strikes. So what did smart traders do? They ran a pre-earnings volatility strategy, buying call options 7 to 10 days before earnings, then selling before earnings day, to profit from the volatility pump, not the earnings result. Return on that setup? Between 85% and 120% depending on entry. That's one trade. But let's look at something even cleaner. This is the strategy that has quietly been the #1 moneymaker in early 2025. Here's how it works. 1. Find a stock stuck in a sideways range. 2. Track tightening Bollinger Bands. 3. Wait for the first high-volume breakout. 4. Buy Delta 0.40 to 0.50 call or put options 3 to 4 weeks out. 5. Ride the momentum burst. And the results recently? Let's take a look. Meta had been locked between $355 and $380 for almost a month. Then, on January 24th, volume hit 2 times normal levels, price finally broke through $380, and options flow showed a spike in $400 calls for February expiry. Traders who entered early saw 150% gains on the $390 calls, up to 220% on $400 calls within 10 trading days. A boring consolidation turned into a quiet fortune for those paying attention. This one is subtle, but it's producing huge wins for traders who understand narrative momentum. What is it? Buying options when you know news is coming, but before it hits mainstream headlines. Let me give you a real-world example. Before Tesla's January robotaxi update, social sentiment spiked. Unusual options flow showed 5 times activity in 2025 call options, and large players accumulated the $275 and $300 strikes. Retail didn't catch it, but options traders did. Result? When Tesla ripped from $245 to $282, those positions went 120% to 260% in 2 weeks. And all because traders recognized predictable news buildup. I know what you're thinking. 0DTE trading? Isn't that risky? Yes, very. But here's the truth. Experienced traders have been minting money on 0DTE/SPX contracts using one simple rule. Trade only mean reversion days after big macro events. Real example, CPI release, January 14th, 2025. The market gapped down at the open, then immediately reversed after CPI data stabilized expectations. Traders using the 0DTE fade the extreme method bought SPX calls around the 9:55 a.m. reversal. Results? Many contracts went from $2.50 to $14, a stunning 460% move in under 40 minutes. This isn't gambling. It's disciplined pattern trading with macro catalysts. This is the most consistent, safest strategy beginners can learn. It's called the volatility crush earnings play. And it works like this. 1. A stock enters earnings with high implied volatility. 2. You trade after earnings, not before. 3. You buy reduced IV options for cheaper prices. 4. You catch the trend the next day. Example: Netflix beat subscriber forecasts and raised guidance. The day after earnings, IV collapsed. January 24th, $550 calls dropped to bargain prices, and trend stayed strong for 3 straight sessions. Return for traders who bought the morning after earnings? 80% to 130% in 48 hours. Low risk, predictable, repeatable. So there it is. The truth about why options traders have been quietly making a fortune over the last 90 days. It all comes down to predictable volatility cycles, watching options flow, anticipating catalysts, understanding breakout patterns, positioning before the crowd, not gambling, not guessing, just following the data. If you want the full, step-by-step guide to each of these strategies, including examples you can learn from immediately, drop a comment below that says, Options Masterclass, and I'll post it next. Thank you for joining us on AI Capital Brief. If you enjoyed this breakdown, hit like, subscribe, and stay tuned. We're just getting started.